Today we have a conversation with Charles Githler, who has a wide-ranging career in finance and in real estate. He's developed quite a few very iconic projects around the Sarasota area and beyond. And we speak about finance and some general economic trends, also some inspirations for developing your own career. So without further ado, I hope you enjoy this conversation with Charles Githler.
Welcome to the Preferred Shore podcast. Here's your host, Robert Milligan.
So Charles, thank you so much for coming to the podcast today, and I'm really looking forward to this conversation. You've had such a wide-ranging career across finance and real estate and still working on some really exciting projects and things, so I'm really looking forward to this.
Well, it's my pleasure to be here. I really admire what you've done here at Preferred Shore, Robert, and I just can't tell you how excited I am about what's happened in Sarasota and where we're going.
Absolutely. Well, I thought if it's okay, maybe we could start in the beginning and kind of talk about where maybe your curiosity was developed to lead you into finance and real estate and, all of these things.
Yeah, it's kind of a secret. I don't talk about it very much, but when I was about 13, 14 years old, my mom had brought me down here to Sarasota to teach Latin at Out of Door Academy. So we lived on Siesta Key.
Okay.
And she fell ill, so I came out of Brookside and went into a boarding school that was headquartered down where the Hidden Harbor Marina is.
Okay.
Called, it was part of the Holiday Harbor group, and it was called the Flint School. And there we learned a lot about history and government and economics, and it started my whole interest in economics and finance. In particular, the founders of the school were subscribers to various investment advisory newsletters who were focused on inflation hedge investments, particularly gold. Today there's other inflation hedges, we can talk about that. But this was happening at a time that almost no economist understood the forces that were driving the markets. Mm-hmm. And yet a few of these advisories were aware of it. It caught Wall Street largely flat-footed. And I was fascinated by that.
Yeah. I
thought to myself, if you could really find insights that no one else was seeing, you could do so much better. Mm-hmm. And that's what sparked my interest in finance and investing. And as soon as I could, I started attending conferences where some of these people spoke, and the conferences were a little too focused for my way of thinking on inflation hedges. And so it occurred to me that a conference that was more broadly offered on all types of investing, all types of publicly traded investing primarily, would be the way to go, and that's how I did it. But I did it by finding a guy actually who also happened to be residing on Siesta Key. You might have heard of him. His name is Dr. Dennis Waitley.
Okay. Yes.
And he's the best-selling author of the Psychology of Winning series.
Right.
And he had somehow got himself into producing conferences for continuing medical education. So he had a working knowledge of how to negotiate the venue, the hotel typically, and set up a registrar book to track who pre-registers and then have everything prepared when people get there. And the nuts and bolts basic of producing a conference. And with him, I produced the first conference in September of 1978 in San Francisco at the Hyatt out there.
Okay.
Which was a fairly new hotel. And we had, it was a huge success. I was charging $500 a head.
Wow.
And we had about 1,200 attendees show up.
My goodness.
So it was a huge early success, very encouraging. We had former President Ford, Bill Simon, William F. Buckley, Arthur Laffer, who is still very, very topical today, and lots of other well-known speakers, probably about 30 of them.
That's amazing. And were you personally responsible to recruit these leaders to come in and speak, or?
Yes,
Wow.
I mean the really big names we got through. We got through a speakers bureau in New York, but a few of them I had met at some of these conferences I'd attended, including the editor of Barron's and William F. Buckley, whose sister went to Smith with my mother, and so I had little connections here and there.
Wow, that's incredible, though. I mean, because that's a massive undertaking to pull something like that together, and so there was 1,200 attendees to the first conference. Did I hear that correctly?
I was 22.
That is amazing, and then I'm sure you went on to do more conferences after that. So,
yeah, my second conference was at the Omni Hotel in Miami that fall, actually. No, the following February, and we had Ronald Reagan and several others. Alan Greenspan was a speaker.
Is that right? Wow.
Before he became Fed chairman, and. But there were quite a few other. The backbone of the conferences were all these excellent speakers who were just known for being prescient in terms of observing markets and recommending investments that performed well.
Right, and if I'm not mistaken, I think it was Warren Buffett who said, relative to efficient market theory, where, as you mentioned before, that you were fascinated, you could have insights and information that gives you an edge, so to speak. Well, if I'm not mistaken, he doesn't believe in efficient market theory. He said he wouldn't have had a career if the market were always efficient,
That's the great debate.
Yeah.
It was actually Burton Malkiel who wrote The Random Walk Down Wall Street, whose book, in his view, proves that the markets are purely efficient. And the indexers, and I interviewed Jack Bogle, who founded Vanguard. And his view is the same. The best way to invest is to be in a broadly diversified basket of stocks. But I agree with Warren Buffett, and I think that you can beat the market despite the fact that perhaps 20% only of professional managers do so, and from time to time the so-called retail investor does better or worse than that. Right.
Well, I agree. Jack Bogle's a legend, and I think he started the whole mutual fund industry, if I'm not mistaken. But yeah, there are. I think a divergent book was Phil Fisher wrote a book called Common Stocks and Uncommon Profits, which was talking a little bit more about being an efficient stock picker. And I think Warren said before, if you think of your investment career as a 20 punch card with that you could only make 20 hole punches over the course of your whole career. And of course, you don't have to hold completely true to that. But if you really think about, picking strategically some better values and things. So I don't know. That is the great debate.
No, it's Warren was also famous for saying that it's like baseball, but unlike baseball, you get more than three
pitches.
Yeah, 3 pitches. You get continuous pitches, and you can just watch them go by.
That's right. Yeah, and you never strike out.
And this is very true of real estate.
That is true as well.
You don't have to buy every single property that goes on the market.
Yes. I'm curious, you said you're reading investment newsletters and things. Were there any fund managers or leaders in investment that you'd say really were formative that you followed and kind of your own methodologies and ideas are most like?
Well, yes. There's fundamental and there's technical. So fundamental, Sir John Templeton would probably stand out the most, and he addressed probably 15 of my conferences, from London to Florida to the Bahamas to I think also in New York. Sir John Templeton would show up and speak, and it was really quite humbling that he would do something like that.
Absolutely,
for our conferences. But he believed strongly that investor education needed to be supported, and that's. I really do hope that I'll be able to repeat that in my own years as I move onward here, and. He was amazing, but his thesis, of course, was the great value investor, And so he didn't care too much about what the overall market was doing and what the technical picture of a stock looked like.
Right.
In contrast, the market technicians, whether it was Stan Weinstein or Joe Granville or Ned Davis, who lives here in Sarasota County, they're all looking at the actual stock price patterns, and when they break down through certain moving averages and so forth, you lighten up on that.
Right.
Honestly, I practice both. I have a very long-term portfolio that has a number of well-known names in it that are, and I can't afford to sell any of it because I've got such gains in it, and the capital gains taxes are probably rising, so it'll further disincentive. Then I have some accounts that are non-taxable, and I really do watch. And I'm more like Dennis Gartman. If something goes down 5%, I start lightening up. If it goes down 8%, I get out. And if it goes down 10%, I disavow any knowledge of ever hearing of the stock in the first place.
That's funny. Yeah.
And I really do that. It's and yet there's these other portfolios, and of course in real estate, I've had assets 20, 30 years at a time. So it's very you can't apply the same investment discipline to all your investments. You have to.
Right. It sounds like, and correct me if I'm wrong, that you were a bit more heavily interested and maybe even personally weighted in stock market and equities and things earlier on, and then transitioned more into real estate later?
Yes, except for real estate development. At the same time I started the conferences in '78, I began building little condos on Bradenton Beach and the Palmasola Bay Estates.
Okay.
Off of 75th Street up in Bradenton, that leads down to Palmasola Boulevard, and then we had a couple of lots directly on the water, but it was a subdivision. It's there. And I did so with contractors who, knew a lot more about it. It was probably I probably could have done better, but it got me into it.
Sure.
The old saying that the fellow that comes along with the experience meets the guy that puts up some money, and at the end of the deal, the guy
who had the money gets the experience. Yep.
But it was no, I didn't get hurt in it, but as you move along, it certainly got my feet wet, and then I started buying downtown real estate in the early 1980s, where the Jewel is located now. Okay. Which used to be the sports what was it called? The sports bar thing down there.
Yeah, I don't know. That's a little before my time. I come here, I think, in '97.
Well, which brings me to the transformation of Sarasota, because you've seen an enormous, because in those days, downtown Sarasota not only closed up, everybody's heard that.
Sure.
What a lot of people haven't heard is my tenants in that building on Lower Main Street put up a sign like a gone fishing sign. Yeah. And they would just not be open for most of the summer. Wow. And the downtown was as dead as a doornail. Yeah. And at night, if you encountered people, you had to worry about it. You funny. Might not be encountering the right person. Right. And that led all the way to the. Despite that, I was investing, and others were too. Is people like Mark Kaufman. We were all stalwarts, but then came the city applied for and received a grant for about $1.1 million. That's all it was, and that created all the neckouts as you go down Main Street with the trees and the bricks and the crosswalks. That gave the downtown a new look, and then there was a storefront grant system that was implemented. So if you owned a property and you've applied for, you could receive a grant to upgrade your storefront. I see. And little by little, that came along. In fact, we did that at the Palm Tower that I owned during that period, which is at the corner of Palm and Main, where Classico is. And we must have done 18 or 20 renovation projects in that building over the course of our ownership.
Is that right? Wow.
But the last owner of the bookstore, before it became a restaurant, because it was called Charlie's News, no relation to me.
Yeah.
But they're the ones that asked me if it was okay to take all the fabric off of the awnings that I had placed there from the money that was
Oh, right.
that was granted to me from the city. Mm-hmm. And I said, okay, so they thought they could grow these vines around them, and they in fact did that, and that's what you see there now.
Yeah, and it is a beautiful look there now.
It really is. That's a very old building.
Yes, yeah.
I think the 1920. It was originally the Hotel Sarasota.
Okay.
And lower ceiling heights, but yeah. So I probably did 5 or 6 major renovation type and even new build projects, including the property across the street where Epicure is located, and so. But it's and then I had so it's all been good.
Yeah. One thing I'd be curious about, and definitely want to talk more about your projects in and around Sarasota and beyond, but we have a lot of young real estate professionals in our audience, and what I found in this age, it seems like with all the social media and things, there's a lot of younger people who are kind of a little bit impatient, and they're wanting instant gratification to some extent with their career and with success and things. And I'd be curious maybe if you can share some insights about when you were beginning in your real estate career and sourcing these opportunities, finding deals in real estate. Maybe how that came about, if it happened fast, if it happened if it took a little more patience. I don't know, just thinking about it from a younger person who's wondering, well, how did you get involved in all of these things? How did these opportunities come?
I think the key is that you have to be prepared to be lucky. Mm-hmm. And because opportunities will come along, but you can't force opportunity where none exists. And what I think now is, I believe, the best time to be starting as a young person in real estate in this area and in this region.
I love to hear that.
And the main reason for that is, as my old friend, I've known him for more than 45 years, I think, Pat Neal. He calls it a boom within a boom. And he went to Penn. He's much smarter than me. And he said, what he's talking about is the overall U.S. economy is still doing well, but the Florida economy,
yes,
and its growth is doing even better.
Yes.
But I would take it one step further and say that we've got 3 layers going on because Sarasota has finally reached that level of escape velocity.
Yes.
Where our infrastructure and our reputation, and by infrastructure I mean the hotels and the airport and of course all the roads and other things that are thought of typically as infrastructure, have reached a point, restaurants and museums and all our other social gathering spots, beaches, clubs, are all upgrading, renovating,
yes,
increasing, so that the gap that has existed between Sarasota and places like Naples, Florida, also super famous international secondary cities like Palm Beach, Naples, the gap between those markets and our market is closing. They're rising, to be sure, but our market is closing that gap.
Yes, and
we're seeing it in prices and so forth. But that doesn't mean that there's still that the opportunity is gone.
Right.
Because at the end of the day, it's what you have up here and it's what you have in relationships, and that I think is the key for people to focus on who are getting into the business, is to get to know everybody and work a lot of hours.
Yeah.
I mean, I was accused of working like a dog,
That's funny.
I'm from Princeton, New Jersey, so some of these words that take on 2 or 3 syllables that I only learned as one.
That's fantastic. Well, I really love to hear you say that there's never been a better time for a younger person to become involved in real estate. because so many younger people do kind of have that vantage point. If only I just started earlier, if I started in the 80s or the, and they, sometimes feel like all opportunity is kind of gone. Everything's been done. All the good ideas have already been had.
No, now is the best time to start. It really is. I would acknowledge, because I've spoken a few times to the graduate school at USF School of Hotel and Restaurant Management. I'm on that board since it started here. Since we started the school here, we have about 250 students or so. People that want to understand better how to manage and operate hotels and other hospitality assets like restaurants. But toward the question and answer period, it evolves toward, where do I get capital?
Yeah.
And there too is kind of an important. You need to network with passive investors that are willing to spot you.
Yes.
And that's the way I got going after I did a few one-on-one or two or three person partnerships. But after a while, I started syndicating.
Okay.
And it's easier now, actually, to syndicate than it was then in terms of the legal pitfalls and structure and everything you need to concern yourself with.
Very interesting. A lot of times people ask, how do I raise funds or attract investors? And it all really starts with the vision, because you can't go around and say, I'd like to have money, and then, for what? Well, I don't know yet, but if I had the money.
That's exactly right.
Yeah.
I haven't ever heard more profound observation, because a really good idea with at least a modicum of detail put behind it, and a business plan, a 5 or 6 point business plan doesn't need to be 35 points, okay?
Right.
but it's something that could become fairly easily a 35 point business plan. So at least you have a pro forma, at least you have a start point, an end point, a market identified, a means of getting it from point A to the end. If you've got that idea and you've got it under control, there's no problem getting the money.
That's exactly
the
right.
money is searching for that,
It
yearning
is.
for that, dying for that.
Yes.
In Sarasota, Florida, it's, the deal is done.
Right.
But to your point, you can't just walk around and say, well, give me money, and because I'm forming a blind pool and I have no background.
Right.
I mean, that's just that's kind of a non-starter.
Yeah, it seems like you'd have to do a little work to form that compelling vision, and if you have that and you can articulate that in a concise way, then there's more than enough money out there. It seems like it would be sensible to me, because I'm again thinking of our younger members of audience, that if you almost pretended as though you had $100 million,
yes,
and you're seeking an opportunity for it,
yes,
and then you find the opportunity and you say, okay, well, wait a second, now I guess I don't actually have the $100 million. That would be the easiest way to
that's a good strategy.
Where do I find it?
Yeah,
that would be the easiest way to reverse engineer the
process. Would, yeah. I'm not sure the scale of $100 million, but
it's probably not necessary.
The concept's good. I mean, if you had $6 million, for example, of equity,
sure,
and
it's probably a better place to start.
And you're putting together a capital stack, because just one of the other issues I've found in large-scale luxury condominium real estate development is the construction loan. And the litigiousness of the business are creating a barrier to new entrants into that market. Because construction lenders, even if you've got all the equity required, and even if you can get the pre-sales, construction lenders, except for super hot markets like this, where to quote Warren Buffett, when the wind blows hard enough, even the turkeys fly. So you've got
yep, I love that one.
So you've got less qualified developers out there today that are still getting construction loans.
Yes.
But typically, and we saw this just five or 6 years ago, they really wanted to see a group of developers or a developer that had gone through a couple of cycles and had plenty of experience, including bad experiences.
Sure.
So that they knew that come what will, they had a pretty good chance of seeing the project succeed and
Yes.
and getting paid off and getting their interest. So I guess what I'm saying is the construction loans, there is construction money out there for new projects, and there's quite a bit of acquisition financing for new projects.
Yes.
I would be extremely careful unless it was a very stable asset about commercial mortgage-backed securities. I've had very bad experiences with CMBS financing, and they have the best salesmen pushing them on us. And these guys could sell anything, and the complexity and the lack of bank-like flexibility. If you need to sell off part of the property, or if you need to refinance, or if you need to exit for some reason, or you just want to prepay the thing, is extraordinarily onerous. And the banks have become, and other non-CMBS lenders have become far more their terms are matching more closely.
I see.
What used to be an advantage of the commercial mortgage-backed securities.
Very interesting. That's a good insight.
Yeah, beware.
Yeah.
I'm not a salesman for that.
Well, and I like kind of where this is going, because it sounds like there are some disciplines and maybe even personality traits or characteristics that help someone be a successful investor. Having a little bit of a fundamental understanding of the law and contracts and things is obviously useful. Is there anything else that comes to mind maybe that you think is essential to be a good investor? Maybe is it different with real estate than stocks?
Well, to your point, I would pay very close attention to the laws which are changing. And in my experience, of course, my embracing of economics and more to the point, the economic outcome of, or the market outcome of economic policy, which led to the inflation, and today is leading to an inflation everyone compares to the 70s, and the rate of inflation appears like the early 70s, which which led to a double-digit inflation rate for one decade, and then up until about 26 years ago, high 6 and 7s. So
yes.
We remember that, but in that case, it was a supply constriction because of the Cold War and no broadband, and not much international trade with China or Russia or the Eastern Bloc. And about the time in the early 80s, we had the end of the Cold War, and we had technology coming in. Electronic technology and other forms of technology, and tax cuts and basically government deregulation, enabling and opening up worldwide trade, which opened up supply. The thing that people don't appreciate as much as they need to, but I do think that the current supply chain interruption is making people take notice that when you constrict supply for any number of reasons, and today we're doing that, in 3 or 4 different fronts. In energy, we're shutting down pipelines, and in labor, we're paying people to stay home, and in other forms we're regulating and allowing either unions or regulations to constrict ports, and so we've got a lot of supply constraint in the world, and it's and the economy is coping with that. Having said that, I think that's going to pass within the next couple of years. So this particular bout of inflation is likely to be different Even when it comes to the demand side of inflation, which has been gunned up, and because gunned by that I mean the demand has been exacerbated because of all the stimulus.
Right.
The stimulus that started during Trump and has gone into overdrive in recent years. And however, it's quite possible that our economy will absorb that if we can just get the supply issue back under control. Meanwhile, back at Sarasota, we're going to continue to have a snowball effect of people throughout the world deciding that United States, Florida, West Coast, de-urbanization from all these cities that are having a lot of endemic problems that aren't going to go away anytime soon, compounded with the fact that it's becoming less and less necessary to go to work in a big tall building in an urban center. And so Sarasota continues to benefit as a result of that. But getting back to I feel like I've given you such a good answer. You wish you'd asked the question.
No, it's perfect.
Little Rick Kaiser used to say that all the time.
That's a great saying, but I think this is fantastic just to hear your thoughts about the general economy.
Yeah, I think so. I'm trying to answer your question by saying that you do need to keep tabs on what's going on. I'll tell you a good publication that people should probably look at, and it's not as well known as Investors Business Daily.
Okay.
It's really easy to read. It has a general global economic section in the front, and then it's all about stocks in the second section. So if you're not into buying and holding and trading stocks at all, it may not be as helpful. But it's not that expensive, and the commentary is really good. And there's a whole page on how to be successful.
Yes.
There's a whole page dedicated to 7 or 8 points to follow. Keep learning and all these 7 or 8 points about how to be successful that your audience would be, I think, could really benefit from.
Are there any expensive publications that come to mind that you would recommend? I know some of them get up there.
Not really for this audience. That they get into much more esoteric topics.
Right. Yeah. How about, I guess while we're on the topic, how about books? Are there any books that come to mind that have had a profound impact in the way that you think about investing or anything for that matter?
Oh, goodness. I have a huge library of books, and I'm trying to remember all the titles now. And a number of the books that made a huge impact on me are not as relevant today.
It's funny how when they come across your path at a certain time in your life, it kind of gets you to the next step then, but in retrospect might not be quite as...
Harry Brown's had written 2 best-selling books about how to profit from the coming inflation.
Okay.
And again, that's what we're going into now is inflation. And I think that is something that, notwithstanding that it will be transitory, not as much as the current administration want it to be transitory, but I would suspect that within 5 or 6 years it'll get back under control just because of the deflationary forces of technology and global trade. And now that the genie's out of the bottle on global trade, even China isn't going to be able to completely look inward. And even if they wanted to,
right.
And the same with Eastern Europe and the rest of the world, and the rest of Asia. So inflation is going to come back under control, and that's important because we don't want to have a hyperinflation.
Correct.
But Harry Brown had written those books, but he also wrote a book that I think is good for people that's off topic, and it's entitled "How I Found Freedom in an Unfree World." And he talks about all of the social and other constraints that are placed upon us. And he became I think twice, the national candidate for the Libertarian Party.
Oh, really? Okay. Yeah,
So
interesting.
he's quite an interesting guy. He passed away about 15, 20 years ago, but
Okay.
his books were interesting. He spoke at a number of my conferences, of course, and
Yeah.
very articulate, debated. So
I'll definitely check those out.
yeah, but there are so many good books out there. I can't think of a single one.
Well, we can always, if you wanted to send a list over
Yeah.
later on, we can always add them to comments and
Okay,
things. to
yeah, I'll
this.
do
But,
that.
yeah, that would be great. So, speaking of inflation, you mentioned that you dealt a lot with that on the Money Show, and there's some traditional hedges against inflation, such as gold and things. I'm curious what your thoughts would be now. What some potential, what a good strategy to mitigate inflationary risks would be for an investor today.
Yeah, well, I'm glad you asked that question. And it comes down to real estate. The Vanguard, which was Jack Bogle's company that he started, has a mutual fund of real estate investment assets, both real estate investment trusts and C Corp traded huge companies, like the shopping center developers and so forth. But it's pretty broad, and it was up like twice as much. I'm sorry, it was up 28% year to date versus 24% in this S&P 500, which is
pretty outstanding. It's
which
quite
is
a run.
really outstanding because
Yeah.
it's a really broad index. So if you had an index, if you could create an index of Florida only, it would probably be 35 or 40%.
Yeah, you're probably right.
And I suppose that would be commercial and residential and other types of non-developed real estate. But the important point here is that all the while, the price of gold has hardly moved.
It's true.
This year. Now, history shows, and this was an article from Investors Business Daily that I just read, and all the people that were quoted, I know them personally.
Oh, that's neat.
And including Sam Stovall, whose late father lived here in Sarasota when he retired at 88.
Wow.
And but gold has not moved, but the article pointed out that it takes a couple of years of an inflation to really be roaring over 3, 4, 5% for gold to start to move. So I wouldn't be surprised to see gold move, but until it does, don't invest in it.
Right.
My other probably provocative point that I'd like to make, particularly to your audience, is be extremely careful. And if you want to read that right, I would say stay away from Bitcoin. It is far too volatile of an asset. If you're starting out and you've got some savings set aside and you need to use it to go after an opportunity or for a rainy day or to buy a house or something, don't be compelled by the fear of missing out.
Right.
Fear of missing out works for real estate when it's in a steady uptrend and there are not more than a 5% decline. But Bitcoin's already gone through 50% declines.
Right.
And that's damaging.
Yeah, and the market cap of Bitcoin and crypto assets in general, it's kind of nosebleed territory right now, and it does make you wonder economically if that makes sense. I've always thought of gold more as an insurance policy against a meltdown in a currency or something like that, but never really thought of it as an investment. Same with Bitcoin and these crypto assets. I think that if you are expecting the rules of the game to change in a way that is very difficult to anticipate, maybe there's a case to be made that Bitcoin would perform really well in that sort of scenario. But I think it's far far more likely that we kind of stay the course in terms of using a dollar in this country, for example, things like that. So I agree with the sentiment that you shouldn't invest from a place of worry, from the FOMO, the fear of missing out. You should invest because your facts and your reasoning are sound, not because you're afraid of missing out.
There have been fantastic opportunities, and will continue to be, in other metals. For example, I'm a large owner of Freeport McMoran, and they do that. That is a gold miner, but it's mostly a copper miner. So they're making the copper that's going into all the wiring, and Alcoa aluminum, and there's a rare earth Van Eck fund, and that has a number of companies that it invests in, none of which you've heard of before.
Yes.
Because they're mining rare earth minerals, some of which are in North America and Canada, many of which are in far-flung places, even Afghanistan, but usually over somewhere in Asia. And these are materials that are necessary to do a lot of important things.
Yeah.
And that I've found from time to time, but for periods of time that were very profitable, and recently, to be an extremely sensitive hedge against inflation.
Absolutely, because it feeds the supply side of the equation.
Yes. Yeah, it's right in the supply chain. The structure of supply. So
yeah, well, that's fantastic. And in the interest of time, I'd like to maybe bring us back into real estate in Sarasota area here a little bit, because I have a feeling we could do this all day. But you've been involved in and been the visionary for so many really impressive projects around town, and have really had quite a profound impact on the skyline that exists now today. And maybe if there's some of the projects that come to mind that you would like to share a little bit of background, or if there's any stories or anything associated with any of these iconic projects. I think, if I'm not mistaken, you've developed the 888 Condo on the Bay, and a lot of others, things like that.
Yeah, actually, I didn't develop 888 Condo on the Bay, but I think it was one of the first iconic projects. The first when we got the downtown development boom started in earnest. I remember one of the first projects being on Gulfstream.
Okay.
And it's interesting that you're seeing new projects on Gulfstream now.
Yes.
But the project that is probably the most visible, besides the Hyatt and the Beau Ciel, which were complicated, and it took me 13, 14 years to do all that.
Wow.
Was the what's now known as the Sarasota Bay Club, which Bob Roskamp and his group ended up developing. But I had already done the site plan for it, and named it the Sarasota Bay Club.
Oh, that's wonderful.
And realized that it needed to be ultimately a continuing care retirement community.
Okay.
And I personally flirted with the idea of being a continuing care retirement community developer. But to be quite honest, I just didn't, your life and your career is what you spend your time doing. And if you do what you love, you never work a day in your life.
Very well said, yes.
But they're dealing with people's declining years, and the reason they call it continuing care, because you go from the go-goes to the slow-goes to the no-goes. You have a skilled nursing facility for folks when they become when they can't take care of themselves. But then you have assisted living and you have independent living, and that's called the continuum. But and here in Sarasota, we've got 2 or 3 of the best facilities there are.
Okay.
But that all started with the Hanson Chris-Craft Marina property, which was 10.2 acres. And I put together a group to acquire it, and I think I paid about $3.5 million for the 10 acres.
Wow!
And
what
my
a steal.
plan was to build a 305-room Marriott hotel on there, and I interviewed the oldest, the largest, and one of the newest established franchisees for Marriott. And the latter was owned and operated by the former CEO of Marriott, a guy named Jim Durbin.
Okay.
So he lived over on the East Coast, and he would come over here, and we became friends. And his wife had passed away, which caused him to retire early. And so he and I worked on that project for a while. And we decided ultimately the only way to really make that project feasible in that location up on the North Trail is to combine it with a convention center and to include the that park that's north of that parcel.
Okay.
And that we couldn't get enough county and city support for that idea. And that's when I started to redesign it as a continuing care retirement community with the two towers that splayed out this way and all the other common resources between, and then on the out parcel, which had been a rug store, a commercial rug store, there's a skilled nursing facility.
Okay.
And Bob Raskamp was he would tell audiences of people that were there that Charles Githler is the one that conceived this whole thing. And I thought, that's all right, Bob.
That's funny.
But that's his personality. He was a high school teacher for many years. He's a wonderful man.
I've not met him. I've met some of his relatives.
Him and his wife are huge supporters of the ballet and other wonderful resources we have here. But that particular sector of real estate requires patience. And John Michad, who was one of my mentors, I don't think he still practices, but he certainly still does continue to invest and develop. Was a lawyer here in town. His name's still on Seifert Michad Law Firm, but brilliant guy, and he's the one that taught me patience. And that's the hardest thing for younger folks to realize.
Right. Well, you mentioned 13 years, for example, for the Hyatt project. And
13 years for the Hyatt project. So another one I'll tell you about is we just finished this year an assemblage of 4 acres directly on Lido Key that sold for more than $50 million.
Wow.
Closed last year. And I started that in 1991.
Okay.
And what it was is it was a hotel built in the 50s that had been condominiumized, and so one of the owners called me up and said, "Why don't you start buying these things? It'll only take you 3 or 4 years." It took 10 times as long.
Yeah. Wow.
30 years, right?
Wow.
But it worked out because we did have some income in the interim, and it was an operating hotel, and in recent years it started to do better, but the operating costs had risen significantly. And that gives me there's one other point that I think is really critical to look at, and that is that 50-year-old hotel condo was only 2 stories tall. And we hired a guy named Elliot Rose, who works over at Coldwell Banker.
Yeah, I know Elliot. He's a great guy.
And he as a result of my project, he said I could have retired because of how well I did selling your property and the neighboring property, but I didn't because I'm getting a lot of calls from other condos that are 50, 60, 70 years old. And I told him, reminded him that Andy Dorr, who worked at Githler Development, had persuaded me to pursue redevelopment of the Dolphin Tower, which is now one palm, right?
Right.
And it had a severe problem.
That's right.
With its
foundation,
structure. Yeah. On the top of the parking level is a transfer structure, and it was failing, and it caused a lot of the electric and plumbing and everything else to fail. But that's an example. The Gulf Beach Hotel,
right?
We had the end of the beachfront building, fall into the sand, and had to reshore that. So, but there have been tragic examples, like what just happened down Miami Beach.
Yeah, it's terrible.
Yeah, and so I told Andy at the time, I said, I scratched my head. I said, there have got to be incentives, meaning like tax incentives and everything, and then both carrot and stick incentives for condo owners to not just sit there complacently and live in these places that are far beyond their useful and safe life.
Yeah.
And sure enough, the Florida Bar Association has already completed a study that you can get through a member of the Florida Bar Association, but it's going to be the basis of legislation that's going to be taken up early next year, in the next couple of months. And at the very least, it's expected to include strict mandates on all such residential buildings, multifamily buildings, of more than a certain age, say 30 or 40 years, certainly 50 years, for comprehensive building engineering studies, not just structure, but fire and that sort of thing. And that's going to put a lot of pressure on condo associations and owners to make better and more proactive decisions about what they're going to do and identify potential risky situations. There was a building that Elliot told me about. I called him just before this interview.
Oh, okay.
And he said, don't get preoccupied with the Surfside, catastrophe, or one of these other towers. Yeah, towers are dramatic, and people think of towers falling down, and that's a terrible thing.
Sure.
But he said there was a building up in Bradenton Beach that was only 2 stories. It was like a eight-unit building, and it was condemned.
Wow.
And we could have had that problem out at Gulf Beach. It's only a 2-story building.
Sure.
And
it's a very good
because
point.
some of these floors have nothing under them. That's the way it was designed, and the rebar is cracking. And if you put enough live load on a floor at grade, you could fall through 4 or 5 feet into a crawl space, and people could get injured or killed. Yeah. And this is all over Florida. Yeah. So why do I say this? Is because your audience should really embrace and understand the implications of what this is going to mean. There are going to be a lot more assemblages. The infill opportunity will be opened up. To your earliest point in this whole interview, your point was, how can somebody start today when everything's already happened? And this is an opportunity to open up that oyster, because there's going to be a lot of infill development.
Interesting. Something I've never really given thought to, and I can see
well,
your point.
Andy Dorr took it further than that. I'm going to contradict myself a little bit. He said, you got to know that some of our larger competitors, Charles, have already created maps that have the underlying zoning beneath these 2- and 3-story dilapidated buildings. And if it's 10 or 12 stories or something like that, it's got a big bullseye on it. If you're taking down a 2-story building and all you can do is build a 2-story building and you won't even get any views, even though you're on the water,
I see.
It doesn't generate as much gross potential sale volume for your new project to justify paying somebody, $2 million for their $300,000 tiny little apartment, with jalousie windows.
I'd like to revisit just quickly your comment about being patient, and have you always been patient, or is that something you've developed in your approach?
I guess I've always been fairly a little bit more patient than my colleagues. Yeah. I guess I've always been a little bit more patient. Probably because it's my nature. But
I can see you have an unhurried demeanor, which is good.
On the other hand, I think back on all the 40 years of doing those trade shows and the kind of wear and tear on the airframe that I put, and I was moving constantly, almost at a pace that was so fast that I couldn't even think about what I was doing particularly. Yes. The next minute I would look up and there I was talking to, 5,000 people in an audience starting a show, and it became second nature. But even then, was thinking about what next year's conference. I think the key that's related, this first cousin to your patience theme, is to look at the big picture and look at the distant goal. If you can start to create and identify distant goals while you're messing around here, getting little transactions done to keep the lights on, that's very important. Obviously, do keep the lights on. But for God's sake, make sure you've got some distant goals, something you can achieve, something you can work on, something you can get a foothold in today that is a distant goal that you can achieve, because that's how you're going to develop not only wealth for yourself, but help the whole overall community and make this an even better place.
Well, with that, guys, that was perfect. That was literally the best nugget of wisdom I could think to have.
Well, it's a pleasure.
And I'm just joking. Yeah, we've got a few more questions for you. But after that statement, I'm just like, what more could possibly be said other than that? That was beautiful, and so true. It all comes down to that vision. When you can clearly see something.
Well, you're a good example.
Well, thank you for that. Yeah.
I mean, you're a very good example. Because when you got here, it's not like, you were a pioneer. There were a few other real estate companies.
There's a couple. So yeah, we're excited about our future as well. So, going forward, are there any projects, how are you spending your time these days? Are there any projects that you have coming up you're excited about that you're able to speak of yet, or?
Well, the tour project was, you won't be surprised, but the tour project was had to be taken offline. We had to refund, I think it was 12 pre-sale contracts. We were ahead of our pre-sale goals. Yeah. We had our construction loan. We had our everything queued up and ready to go, and it would have been one of the most successful projects on the Bayfront, and because of it was delayed tragically, but it appeared to be reversibly because of a CMBS loan where we couldn't get the site out of the loan because the hotel had fallen below its debt service coverage ratio, not to get too technical. And so then the COVID hit, and our financial partner got hit particularly hard because of COVID, because his other investments were all in hotel assets in development, and
that was a big loser in this COVID cycle.
Value play type stressed assets when he bought them, that kind of thing. And so so then we were looking at recapitalizing the whole thing, but at this point, it's likely to go. The whole thing's likely to go back to the drawing board. I do hope to be involved in that, and but we'll have to see what happens. We did a lot of work on that. Certainly, there will be new residential towers on that site, and obviously a few more within the quay itself.
Yes.
Contrary to popular misunderstanding, none of our project was part of the quay. The quay surrounded it all the way down to the Boulevard of the Arts. But yes, but apart from that, there are some other projects that I'm working on that I can't really talk about at this stage.
I figured,
but they're similar.
Yeah, and that's exciting. And so obviously you're putting your money where your mouth is, that you're bullish on the future of real estate in this region. And I'm personally curious. For you, what would you say you get the most joy from in the development process? Is it the visioning the end product, or do you enjoy the financial part of putting the pieces together? What's your?
I think it's the first. I think it's visioning the end product.
Yeah.
And that's always been from the Beau Ciel and the Quay. I mean, not the Quay, but the other projects in there, and the Hyatt. There were a lot of fairly subtle issues, like the redevelopment of the ballroom, which we got done in 7 months.
Wow.
To tear down an existing hotel's ballroom, when the hotel relies for 55% of its business on group meetings is a very difficult and treacherous, costly
Yes.
undertaking.
Yeah.
And it took a lot of persuasion of my partners and even the flag Hyatt Corporation, but Hyatt was excited because we did get it done in 7 months, and they told me that they thought it was going to take 12 months, and they said the fastest ballroom they ever built was in 9 months. So we were pleased at that, and the redevelopment of that marina in there. But yeah, I think I just like the whole thing. I do miss the hotel business, I must admit.
Do you?
Because
Yeah.
I'm not at the moment, having owned and operated about 7 of them from here to Orlando. I don't have any hotel assets at the moment, and there is a pretty crowded field, though. Frankly,
Yes.
there's a whole lot more people looking to get into the hotel
Right.
business than there were.
It seems like we're a little light on hotels in this immediate Sarasota market, but yes, I agree. It's a crowded space.
Yes, which I would have been shocked. I mean, hearing you say that even makes me twitch a little bit, because the off the water downtown market was very light and difficult, and suddenly people started taking that leap of faith. I wasn't
Right.
one of them.
Yeah.
Of building hotels in the downtown with little or no views of the water, and just betting on making that leap of faith that the downtown was going to become such a vibrant, exciting place.
Right.
You didn't need to be on the water.
Right.
And it's almost that the hotels on the west side of US 41 are at something of a disadvantage, because it takes longer and a little less convenient to get to the action.
Right.
For all the retail and entertainment and restaurants on the east side.
Yeah. I've got a couple more questions, and we'll start to wrap up here. In the interest of time, I'd love to chat all day long, but I know you're busy as well. So one thing, as someone who's been here a while, I think, as I recollected, about 97 is when I moved here, and as we spoke, I remember Main Street being basically a bunch of antique shops. So how do you shake your prejudices from the past, in terms of an investment perspective, where even people like myself 2 years ago, I thought a $200,000 lot just east of the trail is expensive, and now by large they're $400,000. And so, do you have a way that you think about shaking some of your past prejudices from experience, financially speaking, and how to focus on the future and not kind of have your vision tainted from maybe bad or irrelevant data of the past?
Robert, I'm so glad you took so long to ask that question, because when you started, I was really going to say I have no idea, but
So I gave you a chance to formulate an answer.
And now I have an answer that I'm very, very pleased with.
Okay.
And the answer is, quite simply, you need to go study markets that are already ahead of you.
Perfect. Yeah.
So if you're and it applies to other areas of investing, like stocks, and if you want to know what your little technology company could look like in the future, look at Apple or Intel, and if you want to know what if these numbers, and I have actually said this to my partners. Because I told them, we're going to need to get up to $1,200 a square foot or $1,400 a square foot, and I'd have conversations with your colleagues in the real estate sales business about that, and how do we know we can achieve those rates per square foot and selling prices? Because we can look at areas on the East Coast and Naples and see the same product selling for $2,000 per square foot. And so does that mean we're going to go to $2,000 tomorrow? No. But does that mean we're going to go higher? It does. And lo and behold, just in the last 12 months, we've seen a lot of that happen.
Yeah. Yeah, well, that is a brilliant answer. So
Thank
glad
you.
I gave that little space. And we can talk about anything else you'd like. I just wanted to, make sure I asked the question if there's any other, wisdom, life lessons, anything that you'd like to share with the audience. That maybe anything that we haven't covered. Just curious if anything comes to mind.
Well, I think the biggest key is to never give up, and never let the daily grind and life's difficulties, which are absolutely inevitable. I mean,
Sure.
my skull was crushed when I was 12 years old, and I couldn't play contact sports, football, or anything like that. It did turn me into a bit of a sports agnostic that Jim Durbin teased me about one day when I inadvertently interrupted him watching his game on the weekend with Notre Dame.
Yeah.
But there are many challenges, physical, emotional, and financial that you're going to encounter. But you have to absolutely never give up. And I know I'm telling Noah about the flood here. You've never given up, but that's the most important thing. I think that another important thing was Bob Morris, another major developer, probably a much longer career than mine. The Landings and many other major projects here, and his son's also a highly reputable developer, businessman. He pointed out to me, he said, you do need to make sure that you're always grateful. Because if you're grateful, you can never become bitter.
Yes.
And attitude is everything. I suppose I learned that at a young age from my dad, who was in World War II and helped liberate some European countries, and taught me the importance of being positive and being active in the community. But later, of course, it was Dennis Waitley, who coached Super Bowl athletes and Apollo astronauts, and explained how your self-expectations is everything.
Yes.
And I made this point before, but if you can find your niche in your work, you'll never work a day in your life, because
Yes.
you'll have so much fun doing it.
Love that. Well, I have found this conversation to be thoroughly enjoyable. Maybe if we're lucky enough, maybe someday there'll be a round two, maybe a project to talk about or promote or something along those lines.
It'd be my pleasure.
Yeah, but thank you so much, Charles, for joining us today. And if you'd like to invite anybody to reach out to you, is there any particular website or anything like that you'd like to?
I'm Charles at GithlerDevelopment.com. That's
Okay.
that's my email address. And yeah, absolutely. If someone wants to reach out to me, Charles at GithlerDevelopment.com, I'd be happy to look at something and start a conversation.
Fantastic.
Thanks for asking.
Yes, of course. Well, again, thank you for coming on the show today. I want to thank everybody for joining us today and listening to this conversation. And I'm sure that we'll be speaking again before long. Have a great day, everyone.